Hey, what's going on, guys? Mark Levinsky, CEO of Sky Entrepreneurial, Enter Sky LLC, Enter Sky Inc., and the Susie Doll Foundation. That's my nonprofit. If you're interested in learning more about that and what we do, go ahead and give me an email at entrSky@gmail.com. We're always accepting donations and volunteers. So give me a holler if you're interested. Thanks. So what today's video is basically just kind of following up on my process of what I'm doing as a business owner and someone that recently filed bankruptcy a little over a year ago. So when you first go through a bankruptcy, depending on the type of bankruptcy you do, it's very difficult to qualify for lines of credit, loans, cars, homes. And so in this video, I kind of want to touch on what are the things you can do day after, day of, completely discharging all of your debts in a Chapter 7 or Chapter 13. Obviously, things differ from bankruptcy chapter to bankruptcy chapter, and this is specific to an individual, not an entity. So I'm not talking about Chapter 11, and I'm not a landowner or a farmer that filed, I think it's Chapter 33, if I'm not mistaken, Chapter 13. I didn't file Chapter 13, Chapter 11, or Chapter, there's another chapter. Point is, it's not Chapter 13, Chapter 11. There's one that's specific to landowners. Talk to an attorney that specializes in bankruptcy if you're more interested in that. By no means am I an attorney or a CPA. I'm an Arizona licensed realtor, an investor. I invest in Arizona. I invest in Utah. I invest in Texas, and I invest in New Mexico. So I have properties throughout the Midwest. I predominantly stay away from California. I think it's an overly inflated market, and there isn't a whole lot of opportunity for at least me and my business model. So that being said, kind of the things I wanted to talk about more or less today are what you could do, like I said, the day after you file bankruptcy. So obviously you need to kind of rebuild your credit profile, because a lot of people don't take this into consideration, but when you purchase a car, purchase a home, rent an apartment, your credit score, your FICO score is what's used to determine literally where you live and what you drive. Your lifestyle is quite literally determined on your ability to take care of your credit. And if you're not paying things on time or negotiating down debts, some things that you've gone delinquent on, or are doing something like filing bankruptcy because you have way too much debt and can't afford it, that kind of stuff negatively shows your ability to basically be an adult. And businesses, landlords, property management companies, car dealerships, banks aren't going to trust you with any form of collateral or, quite frankly, their residency. You won't even be able to lease a car for, in most cases, unless it's a company that specializes in bankruptcy. So don't worry, there are tons of banks and lending institutions and landlords that literally specialize in lending to people that are down on their luck, that have filed bankruptcy or are negotiating down debts and maybe a risky borrower. Oftentimes, what I've seen in the property management industry for people that are trying to rent homes that want to rent from a landlord is typically they ask for 1.5 times rent, or just 1 month's rent, in addition to an actual amount of your first month's rent. So that typically is your security deposit and any fees associated with that they charge you up front, to secure that residency. And the reason they do this is it's very quite simple. If you vacate or vanish into thin air, well, they have something to hold as collateral if you decide not to pay your rent and they have to evict you. That's typically what I've seen. It depends on state to state, city to city, business to business, location to location. It's really dependent on the property manager and landlord, what their business model is. I mean, I've worked for businesses that are property management companies that won't even lend to you because you have a bankruptcy on your record, point blank period. It's just not their model, especially during COVID-19. A lot of people were very hesitant on the type of people that they let into their properties. have worked for a couple institutions that specifically say you have to have multiple streams of income in order to rent. So that means GI Bill, unemployment, actual employment, um, tons of things. They require at least three sources of income, and they will deny you because of your income. And they no longer use the 2.5% rule, which is weird, but it's their business model and can't discriminate. So that's what it is. So what the steps I took immediately following my bankruptcy were very simple. I started looking into creditors that would lend specifically to me based off of my credit score. And so one of the first things I did was look into my actual credit bureaus that were being utilized to determine their FICO score, or whatever their um, version of FICO score was. And so basically what your FICO score consists of are typically three major bureaus: Experian, Equifax, and TransUnion. There are other bureaus that exist. In fact, there are over 4,000 bureaus that people don't actually know of that aren't accredited or continuously used. But there are six major ones that are used. And even in when qualifying for insurance for your car or even renter's insurance, for that matter, there are credit agencies that are used. For instance, your home insurance or car insurance, what they look at is actually called LexisNexis. A LexisNexis score kind of accumulates your criminal history and your landlord history and pulls that together, aggregates that, and puts it into a report and gives you a score based off of how many tickets you have for speeding, parking tickets, how likely you are to file a claim. And insurance companies use that when they're determining what they're going to provide you for a policy. And you can go to LexisNexis, their website, and Google it, whatever. You can go to the LexisNexis website, pull your report, and then start disputing things if they're inaccurate. I'm currently disputing things for speeding tickets that I've never had before, which don't make any sense to me. And it was simple. As all I did is I went to the DMV, I pulled my license and registration information to show my history of speeding tickets and whether or not they've been discharged or not. And I sent it to them and I said, look, this is wrong. I don't have a speeding ticket. I was never convicted of this. There's no points. I don't understand where you're getting this information from. You need to drop it. And so it's as simple as that. It's really all that simple. Another thing that you can do too to improve your score quite instantly is sending out letters for incorrect information. When I filed bankruptcy, I didn't actually lose any of my four rentals that I had. One, because three of them were government backed and didn't exceed the actual amount of money that I owed on them, or quote unquote didn't. And then one of them wasn't even publicly recorded. It was a private investor that's privately lent me a down payment and then privately turned the seller finance note in to me and basically is taking long-term capital gains. And at the end of whatever we determined our amortization schedule will be paid off. So that's what I was able to keep those homes, and because I was able to keep those homes, they didn't report correctly on my credit reports. So when I pulled my free credit score, my annual free credit score, I didn't actually have those reporting that they were on my report still, and the accurate balance was still there. Some of them said that they were paid and discharged. Some of them said that they were negligent 3 or 4 months, and it didn't make any sense. So I ended up disputing them. I showed them that I was paying my bills on time. I was consistently paying the amount that I owed. I was still receiving rents. I still had positive cash flow. I showed them the bank accounts and I said that this is incorrect and you need to correct this information. And then I refinanced all of those. I refinanced 2 out of the 4 homes and ended up re-reporting them again anyways. So, just having that correction made ended up bringing my scores up on average 15 points. And just because the agencies that were reporting them weren't reporting them correctly. So I had to call the agency and say, hey, you need to report this correctly because this is incorrect. And then obviously talking to the institutions that are, anytime you have a credit report pulled for whether you're purchasing a car or a home or you're applying for a new credit card or even a bank account, sometimes even a job. If you work in the financial industry, you probably won't get a job if you file bankruptcy. I know you can't get a mortgage loan originator's license if you file bankruptcy, and you can't get an insurance license if you file bankruptcy. So, making sure that you're staying on top of your finances is important. It's literally going to determine the type of job you can even get. So one of the things that I did was I ensured that all of my derogatory marks were correct, and if I owed any money, if I didn't owe any money, if the stuff wasn't discharged, and so I went through and I followed every single one of the things that I put on my bankruptcy, and I said that they needed to be discharged. I even had some business loans that I had personally guaranteed that I had put on my bankruptcy for the purposes of knowing that I was going to go delinquent on them. So when I filed, they weren't allowed to put the information onto my personal credit report, and then that entity just went out of business and dissolved. So there was no reason to file a Chapter 11 and liquidate. So because of that, I ended up raising my score when I filed bankrupt. By the time I got to bankruptcy, it was a little over 170 between my business, $170,000 between my business and my personal credit account and debt. Like I said before that, in my personal story, I had a little over $2.8 million worth of assets and homes that I had owed money on, but I had liquidated those and given them to the people in second position that I borrowed for the down payment and carrying costs for the flips, and ended up getting rid of a lot of the assets that I had and selling some cars that I had purchased for the purposes of wholesaling and reselling. Ended up losing some money because at that point I was going to file bankruptcy. What does it matter? And ended up paying down some of the personal debt and then filing bankruptcy. And then once I did that, my score, believe it or not, a lot of people think your score goes down immediately filing bankruptcy, but it doesn't. In fact, it actually goes up. For my case, I was at a 384 when I filed bankruptcy, surprisingly, because I had extenuated 100% of my credit that it was allotted to me, and I also was delinquent 3 months, and because of that, I was losing 30 to 40 points a month um, in certain areas, and because of that, my score went from what it was originally 720 to 384, and that happened over a course of 6 months, 6 to 8 months, because I had overextenuated and stopped paying after about 5. So because of that, my score dropped significantly because I was utilizing too much. When you purchase something with a loan, because it has an amortization schedule, does not reflect negatively like revolving credit does. Revolving credit's specific to credit cards, lines of credit. It's anything that you pay off and then you get the money back. So if I have a credit card or home equity line of credit or a line of credit for overdraft protection, and let's say that I have $300 that I have allotted to me for that credit, if I go over $100, which is 30%, if I go over a 30% utilization of that credit card, that line of credit, that home equity line of credit, believe it or not, it actually shows on your credit report as a derogatory remark, because you're exceeding that 10 to 30% of what you need to be spending in terms of credit. So what I used to do when I started building my credit originally is I would get like a $5,000 line of credit. I would max it out on, let's say, my living expenses, rent, car payment, car insurance, all of those things I would pay with a credit card. And then I would receive my paycheck. I would put it in a bank account by the third. All of my bills would be paid, and I would be taking that money that I received at the beginning of the month in my military paycheck, and I would immediately pay off that balance of $5,000. And I did that every single month. And occasionally I would throw stuff on it like gas or food, but I would make sure that I stayed below 30% of my utilization. And so, once you file bankruptcy or you lose or you damage your score, one of the first things you need to do to repair it is very simple. Start negotiating your debts. Start talking to the creditors that you actually owe the money to and say, hey, I know I owe you $5,000, but I only have $1,000 right now in the bank. Can you take that? And then just try to negotiate. They may come back and say, no, we want at least $2,500, and say, oh, I don't have $2,500. If you give me 24 hours, sign this document that says you're going to accept this, I can give you 15 or 1750 or whatever. And, just give them that and start negotiating your debts down. I wouldn't recommend filing bankruptcy unless you owe a lot of money. Anything above, I would say $25,000 is when you should really say, okay, I should probably go file bankruptcy. Anything below that, and this is just my personal opinion, because I went big or went home. Like, I had a lot of debt. I had enough debt to buy 6 houses. So, in specific markets in this country. So, you take that as you will, but $25,000 is not a lot of debt. If I was you and I was in that position again, I'd start negotiating the debt down. I'd start finding ways to pay it off. I, maybe not pay it if it was 100, or if it was $5,000 or $6,000, and maybe just let it fall off my credit report after 7 years. But keep in mind too that creditors can actually renew a judgment every 7 years, or pay the collection agency $150 to renew that on your credit report. And just because it's no longer on your credit report, or it's not on there to begin with, does not mean that there's a collection agency not still trying to obtain that money. I've had aggressive collection agencies call my friend's workplace because of a $1,500 check that I had put on there on my credit report, because he was also on the lease. And because he was also sharing the lease, even though we actually removed him, and they lost the paperwork. Because they lost the paperwork, they sent it to a collections agency and he had to pay for it. And they went to his work. They actually sent someone to his job and said, you need to pay this, which is incredibly invasive and actually illegal. It's an invasion of privacy. And it's considered defamation of character, and something else. It's a violation of his tort law rights. And so, yeah, I mean, it's a big deal. Paying your debts on time. But, first things first, negotiate your debts down, try to pay off what you can, and you'll instantly see your score increase. But you should pull your credit report and kind of get an idea of what's on there. And then once you've done that, start negotiating or start getting rid of derogatory remarks, correcting information on your report, actually looking at it and saying, okay, this is incorrect information. And making sure that it's up to date and current, and speaking to every creditor that's doing it. And then, like, when you apply for credit cards and stuff, that's 1 point. 1 point immediately goes in your credit report if you're shopping for cars and they're pulling your credit, or you're shopping for credit cards or even bank accounts. So, making sure that every time that hard pull of your credit score, that 1 point is removed, sending out letters and saying, hey, remove this point, remove this point, remove this point, remove this point. Because oftentimes that stuff's just going to sit there, and it's going to sit there, and it's going to sit there, and it's going to be a derogatory remark on your credit report for at least 3 to 6 years. I think it actually stays on your report for 7 years, and then it falls off. I have over 150 because I've been applying for credit cards and car loans and personal loans, just so I could rebuild my credit. So once you've done those things, then it's really time to start actually applying for stuff. And that process, honestly, those paying down those debts and negotiating debts and removing derogatory remarks and correcting misinformation could take you easily six months to a year. That's not what I did my first 6 months to a year. I spent the first 3 months doing that. And then after that, I got everything fixed. Actually, it took me about 20 days to do everything. But because they send letters back and forth, and they communicate snail mail, it takes a while. So once I got everything corrected to what I thought was proficient enough for me to actually start rebuilding my credit score, I got 3 secured credit cards. Now, secured lines of credit, or secured credit cards, or secured loans, or security of any kind when you're borrowing money, basically comes down to one of 2 things. There's an asset that it's tied to, so your car is secured, or your car loan is secured by your car. Your tractor loan is secured by your tractor. Your house loan, your mortgage that your deed of trust or your note is secured by the asset of the house itself. Your commercial property is secured by your commercial property loan is secured by your commercial property loan. So these are asset-based assets that are tied to a loan, and the asset itself is a security for the bank in case you default after a certain course of time that's specified in the note documents that you've signed when they will get it back after you've defaulted. So I think in Arizona, I think it's like 37 out of the 50 states are deed of trust states, which basically means there are 3 parties involved. So you can go delinquent up to 90 days and not actually end up going to the foreclosure process. The 13 original colonies, and I think Texas in some portions, still do a conventional mortgage, which can take up to 2 years to do a foreclosure. They have to take you through the judicial system, and they actually have to take you to court, and then they have to win. And after they win, there's still a significant amount of time that's involved, that they could before they could actually take your house. Oftentimes, by the time people actually you lose their home, it's actually already been sold. So it's pretty good for the homeowner, not so good for the banks and the financial institutions. But like I said, 37 out of the 50 states do a deed of trust. There's a third party involved, typically an attorney or an escrow agency that's kind of speaks on behalf of the bank and you, and mediates between the 2 parties and issues the foreclosure once you've hit your 90-day limit or 91st day. So once you've kind of cleaned up your report and kind of gotten a bearing for what it is, start applying for secure credit cards. These can range anywhere between $100 to $300 just to put on a credit card, and you can even do a secured loan. Basically, what it is you walk into a bank with, let's say, $10,000, and you say, I want a secured loan, I want a secured credit card. And they give you a line of $10,000 because that's what you brought in. And then they charge you interest for it. They're very expensive. Typically, if you file bankruptcy, when I got mine, I had to pay a $50 fee to set it up. I had to pay 24% interest, and it started accumulating on day 1. So a lot of people don't know this, but most credit cards, at least unsecured credit cards, typically don't start accruing interest or charging interest until the 28th day. So you can go from the day you use it to the 27th day and not have to pay an interest, which means that if you max out your card and you pay it off within a week, you could effectively not pay interest on it. And they're not an amortization schedule. So that means that you have to be responsible enough to create your own amortization schedule and pay it off in an orderly fashion. Otherwise, it will essentially be interest in a very, 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 very small portion of your principal. Typically, credit cards are 2%, or lines of credits are 2% plus the money that you borrowed times the interest rate divided by 360 times whatever days you had until you paid it, which is typically 28. So keep that in mind when you're paying for your credit cards or using your credit cards, because they can be manipulated to be an asset or a tool rather. So what I did is I ended up walking into 3 institutions. Didn't walk in, I did them online. I Googled secured credit cards, and I applied for 3 of them. I had $900. I applied for 3 of them. I put $300 on each. I paid all of them. I paid, because they have a $59 fee. I paid all of the fees as soon as I got the balance. I paid the fees immediately. And then that same month that I got the fees and it reported, I went and applied for 3 unsecured credit cards, and then I closed those and received my $900 back. So that's how I did it. That entire process took me 3 months again. So that was from the time that I started fixing my credit to the time that I actually started using credit again, was about 6 months. And then, I started applying for credit cards, And every single month I would receive something in the mail. I would receive something in the mail. I would receive something in the mail. And a lot of people may think that that's crazy. You receive something in the mail and you apply for it, but that's how you build your credit. You actually have to use your credit to actually build it. And as long as you're not going over 30% and you're using it for a purpose you're going to spend money on anyways, it doesn't make any sense not to do it. I used my first credit card. One of my first credit cards after my secured credit cards was a credit card for Walmart. I was going to go in there to buy groceries anyways. Why would I not get a credit card to build credit? So if I'm going there to spend money anyways, it makes sense to spend money. Maybe I'm spending a little more on interest. Maybe I'm not because I'm beating the system and I'm paying it off before 28 days. Or maybe I'm not, and I'm paying $4 or $5 a month because I'm spending $200 there every month in food. Who cares? Like, I'm building my credit. It's important. It's going to sure, I'm paying $4 or $5 now every single month, and that's effectively $30 or $40 a year. But what's $30 or $40 a year now when I'm actually living in a very large house, or I can afford more because my credit score is larger? And the reason I value that point rather than saving the money and not building my credit is for one simple fact. When I go to purchase a house with an FHA loan, if I have a 520, which is the bare minimum currently to qualify for an FHA loan, if I have the bare minimum credit score, and let's say I don't have any debt, I don't have any monthly debt expenses, I don't have a car payment, I don't put any of my insurance payments on there because you're not required to. It's just the stuff on your FICO score. So if I don't have anything on my FICO score, it basically says all of the money I receive every month is to do whatever I want with. Then I can only afford off of a $56,000 a year income, roughly about 3 times what I'm currently making. So that means that I can only afford a $150,000 house just because I have a 520 credit score. However, if I made $56,000 a year and I had a 720 credit score, well, that changes everything. See, the way the banks see it is because my FICO score is significantly higher. I'm able to afford more. So they may provide me an opportunity to get a $300,000 home off of that $56,000 a year rather than a $150,000 home, just because I don't have any debts and I have a larger credit score. And that's all it comes down to. The risk tolerance for the bank is what they're willing to give you based off of your score. And there's a lot of banks too that won't even look at how much money you make every year as long as you have a 720 or higher, and will give you very, very large lines of credit. At one point in time when I had a 750 credit score, they never asked what I made a month. They said, okay, you have a 750, you're close to 800, you're damn near perfect, you have a perfect history on your lines, your payments. Let's just give you $25,000 in a credit card. Like, they didn't even ask me how much I made. Rarely did they ever ask me how much I made when I had a good credit score. So, your credit score literally determines how much money you can make in a year in a job. It's important. So, once you started applying for credit and you started using it, making sure you aren't, going over a certain amount. What I did is I created a spreadsheet of all of the credit cards I wanted, how much money I was trying to get in terms of credit limits total, and how much money I was spending each month on each card. And so it was a simple credit. It was a simple spreadsheet. It's basically said the name of the card, what type of entity held it. Was it Visa, MasterCard, Discover, American Express? And how much the line was, how much money they let me borrow. Was it $1,500? Was it $300? Was it $5,000? Was it $10,000? How much money I currently owe, when the payment is, how am I supposed to make that payment, what their phone number, their website, and if I had any login information, what that was, and then any additional notes. And so I have currently, at the current moment, I have over 20 cards. And that's, there's small limits. They're secured credit cards that I no longer have that are still on that spreadsheet, which I need to remove. So I guess it's 17. And then I have a bunch of smaller lines. And the reason I have those and I haven't closed them down is because that's reporting history. The way a bank's going to see it is, oh, I've made my payments. I've had my payments since then. Once I remove that card or I close that card, it's immediately removed from my history and it's considered a derogatory remark. I had a GameStop credit card when I was in the military back in 2015 and from the time until 2017, and I closed it the day I got home, August 17, 2017. I closed it. And because I closed it, it shows on my report as negative because I closed it and it's no longer on my history. I don't owe any money on it. I think I had like a 350 credit limit on it. So I never owed any money on it, and I never actually used it. But because it was on my report and I removed it, it's now negative. So now it shows as a delinquency, which is weird, but that's just how it is. That's just how they see it. That's how the credit bureaus and the FICO score aggregates the information. So once you've done that, then there are a couple of things you can do. If you're trying to accelerate that process a lot quicker, there are three major things that you can do to improve your credit score exponentially. Once you remove the derogatory remarks, once you've started applying for credit cards and using them, you can apply for a loan, and a car loan or a home loan or a personal loan, and start using that and show that you can actually pay your debts on time. Make overpayments. Don't just pay the bare minimum. Overpay. The next thing is you want to start actually, maxing your cards out and then paying them off within a week. So if you go to a store and you have a $350 credit limit and you buy all of your groceries all at once and you max it out, we'll pay it off as soon as you get home, because that agency is going to report 4 to 5 times in that month. And if they report that you've got a 350 limit and you use $350, well, guess what? It's a derogatory remark. You're going to lose 5 points, not gain 8. And that's what happens. That's happened to me 4 times because I forgot to make a payment the day of. So make sure that you're maxing them out and then using and paying them off immediately, and keep track of it on a spreadsheet. Keep track of what you're using on a spreadsheet. Keep track of the cards you have. Keep track of the companies you have. Keep track of whether or not they have fees and how much they are. Because I have some that are $150 like a year, and I basically just use it to build credit. And then the last thing is you can accelerate your credit score once you've removed all your derogatory remarks and you have these lines on your report showing. You can actually do what's called, you can actually add yourself on to someone as an authorized user. And what that, there's another term for that. It's called a trade line. Basically, what a trade line is someone that's had at least 2 years of established credit history on a card they've never exceeded 30% of their total payment, their total amount borrowed on, and they've consistently made their payments on time or early, and their score is perfect. So a lot of times what I've seen, there's entire companies that have turned this into a business model where they will pay people to borrow their credit card information and add people as an authorized user. And that's how you do it. That's how you create a trade line. That's how you establish a trade line. It's someone with a pre-established rapport with an entity that's got a great credit score, and then they add you as an authorized user, and then they never give you the credit card, and then they max it out and they pay it off, and they max it out and they pay it off in like a 3-week period. And because they do that, your credit score goes up 100 points, and it's artificial too. It's not permanent. Once that next reporting cycle happens, which, like I said, 4 to 5 times a month, once that next reporting cycle hits, your score goes back down to what it was before. So make sure that if you use a trade line and you know it's hit your report and you're trying to file for or apply for more applications or more credit cards or whatever you're trying to do with that extenuated artificial score, make sure that you do it, that day, because otherwise you will lose it fairly fast. Sometimes it does stay permanently, but that's uncommon. Another thing I do too is I monitor on Credit Karma. A lot of people don't like it because it's smaller in terms of, or it's less accurate. It's not smaller, it's less accurate. So it could be short 50 points or it could be above 50 points. It just depends on, whoever is reporting or aggregating your information from. And it doesn't show your Experian report. It shows your Equifax. So it shows your Equifax and TransUnion, and every time I look at that TransUnion score for what I'm looking for, I'm just not seeing the correct information. It's always 2 or 3 months behind, and it's really aggravating. So I'm constantly disputing information. It's probably not even necessary to dispute. That usually shows up correct later on, anyways. So that's something that I use. The reason I like Credit Karma predominantly is because it offers you opportunities to maybe refinance your car loan and get a lower interest rate, or offer a secured credit cards that you need to use to build your credit, or it shows you what your next step is in terms of where you want to be. So I think it's good for keeping track of your credit health. But that's just where I'm at. I'm getting ready to pay $1,500 for 3 or 4 different credit lines or trade lines that are um, credit limits of 25,000 each. And then once I do that, I'm going to start applying for $25,000 credit card limits, in hopes that I could actually start receiving those lines. Um, but I wouldn't recommend doing that until you've hit at least like a 680 score. So when I started a little over a year ago, I was at a 384. Now I'm at a 680, and as all I've done is everything I just said. I spent the first 3 months getting rid of derogatory marks, and correcting misinformation, and removing the one credit inquiry things, and then started applying for secured credit cards. Once I got 3 secured credit cards, made the fees, paid the fees. Once I paid the fees off for each credit card, I went and applied for normal unsecured credit cards, canceled the secured credit cards, got my money back, basically maxed out those 3 new cards, used the $900 I originally received, paid them off immediately, and then just started building my credit and then applying for everything that came in the mail. So like the other day, I got a card from Avant that said you've been pre-qualified based off of your credit score for a $1,500 credit limit. So I applied for it. I don't really care who offers it or what it is. It's a new line of credit that's going to show on my report, and I'm going to use it. Maybe I use it to pay off another card that has a balance on it, and then I just transfer balances consistently every single month to make until I pay something off, or just to fuck with them. I mean, I don't know. I do that where I'll go buy something for like $100, and then I'll transfer the balance to somebody else just to build my credit report. So that's another thing you can do too. But now that I'm at 680, it's time to start accelerating that process, and start using trade lines. So I'll reach out to a family member or a friend that trusts me and knows that I'm responsible, or that has a good credit score and a good established history, and I'll say, hey, can you add me as authorized user? I don't care what you do with the credit card, as long as you're making your payments on time. I just need the report, or I'll go pay $1,500, like I said, for not to be added onto someone else's trade line. It's a professional business. I'm more likely to do that than reach out to friends or family, because I'm just the type of person, I don't like to use other people's money to that extent unless I know that I can give them an asset that's tied to security or collateral. I just prefer that. That's partially why I was able to walk away from my business of $2.8 million, was because I was able to give my assets away to the people that had initially invested in them and follow through with them still making a profit. I just removed myself from any profitable gains. So that's just how I view other people and their finances. I try to stay out of it and do things independently. So like that's my next step. And once I do that, I should really be at a 720. And at that point, that's when I really need to start applying for homes, in my opinion, because that's usually the credit profile that you're going to need to actually start qualifying for substantial deals. Um, and so that's where I'm at in my bankruptcy. I mean, there are a couple of things that you can do immediately filing bankruptcy if you have a 580 or better. Um, I mean, even if you had a 680, well, probably a 720, which is unlikely. I mean, there are people that are in that situation, but it's unlikely. Um, but I've seen lending institution, as long as you have 620 and you have a 25% down payment, they'll let you get a portfolio loan, or what's called a I forgot what they're called, but it's a type of loan. It's not backed by the government. It's not a conventional loan. Um, it's just one that they give to people that don't non-conforming. That's what it is. It's a non-conforming loan. You can get a non-conforming loan by putting 25% down, as long as you have like a 580 credit score or 620. I mean, there are institutions that will give you a home because you put 25% down, as long as you're trying to purchase a rental property, and they will never look at your credit score. They do what's called an asset-based mortgage, and if you put it in an entity and you put 25% down, they don't really give a shit. So um, I personally am getting ready to start purchasing again. Like I said in some of my other videos, I'm getting ready to leave in 40 days for 40 days for military obligation. And for me to purchase an asset right now doesn't necessarily make sense. So I'm doing a lot of the steps to set up an entity structure, so I can start purchasing assets and start building my credit. Once I've established my personal credit and I've reached at least a 720 like I want, and I can start qualifying for refinances without necessarily paper assets or a paper trail showing my income, I'm going to start doing things like building business credit. So after I finish building my personal credit and I've maximized the amount of money I can receive in housing assets with FHA, USDA loans, and VA loans, and I've completely eradicated any possibility of qualifying for another mortgage, I'll do one of two things. I'll refinance it into a portfolio loan, and I'll do it all over again. Because believe it or not, portfolio loans don't end up on your credit score, depending on the institution you use. They usually end up on a business's credit score, unless you default. Then they end up on your personal score if you personally guaranteed it. So once I've done that, then I'm going to start maximizing my business's credit profile. Um, a lot of people say that when you're purchasing a home, that you should have it in an entity, but I don't see that. The reason you do that is to prevent someone from suing you and stealing your equity in the home that you owe. But if you have an LLC and you have a primary loan, and let's say you've got a VA loan and you didn't put any money down, because VA loans don't require you to put money down, and you purchased 100%, and your home is stagnated and hasn't gone up 3% like everybody else's has, then you don't have anything for someone to steal. There's no point in having it in an LLC because there's no equity for someone to steal it. So then they'll just file an insurance claim on their own insurance provider, and their own insurance provider will reach out to you, probably file a claim against you, and then either way, I mean, you're still fucked, because they're going to file a claim with their insurance company. If you have it in an entity and it's in the entity's claim, well, oh well. It's still gonna affect your personal insurance. It's still gonna affect your personal coverage because it's gonna show up on your LexisNexis report or your Sage Stream. So keep that in mind when you're doing things, especially in real estate. You don't need an LLC. You can get an LLC to lend you the 25% down and cloud title in second position and still have no equity. Um, my properties don't have any equity in them because I didn't put any money down. I got grants or USDA or VA loans, so there's no equity in there to really sue me for. Um, so if something happens, well, they just go after my insurance company, and I mean, whether I have it in an entity or not, it's still going to affect me personally, so it doesn't really matter. Um, so yeah, I mean, that's how I view it. So pay attention to your credit score, and if you're trying to start a business, whether you're flipping houses or selling clothes or feeding the homeless because you're a nonprofit, your credit score is important. It's going to determine, you know, not only your personal lifestyle but also your business lifestyle. So make sure that you're staying on top of that. That's one of the things that I'm doing, is staying on top of my business and personal credit report, because that's going to determine whether or not I qualify for a small business loan or whether I qualify for an apartment complex and live in a specific area, or get a house and be able to refinance into a portfolio mortgage. Those things are important to me. So, like I said, this week was more focused on rebuilding my credit score and kind of explaining what I've done to get to where I'm at now. And maybe next week I'll probably touch on specific things like talking on the trade line. But I mean, this is just what I'm doing in terms of my credit score. Next week, probably going to show you, or throughout this week, maybe show you some of the stuff that I'm doing in terms of my business. If you're following that stuff, um, kind of setting up a business entity, tune in for that. Stuff's pretty cool. Yeah, I think next week I'm probably going to talk about, looking up a real estate deal, and maybe even sending a contract out to something that's $40,000 currently, but is worth $80,000 in a foreign state, and show you how I would build a team being out of state. Um, Maybe I'll do that. I don't know. We'll see. Alrighty, guys. See you next week. Hope to tune in. Adios.